Hey, Dan Passarelli here. This is a topic that I don't really talk about that much, but I kind of find it interesting today. So today, PPI came out and it was a fair bit lower than expectations, meaning lower inflation, a lot lower month over month, a tenth of a percent lower year over year, which is pretty good. That's a good improvement. What I find interesting, though, is the surge in gold today. Now, we've had a surge in gold for a while, and for a lot of intuitive reasons. The thought of interest rates coming down, inflation still hanging in there, and global economic stuff going on, the Ukraine thing and the trade wars. But I find it interesting today that inflation was a bit lower, the market sold off, and gold went up. And let me talk about why I'm thinking about this. If you think about currencies, a really good way to think about gold, and you kind of have to wrap your head around this, but the price of gold doesn't change. Okay? What changes is dollars relative to gold. When the price of gold goes up, what's really happening is the value of the dollar is going down. And so you could say that it kind of tracks inflation, but the thing is that inflation is a lot more volatile than the price of gold. So when inflation is lower, meaning dollars are not getting as much cheaper, but yet gold still goes up, well, that leaves us to thinking about the other factors that influence gold. One being interest rates, and according to the FedWatch tool, interest rates maybe even are a little bit more sticky after today's number. I looked at the CME federal funds contract, Fed funds contract last week, and there was a 5% chance priced in of a 25 basis point cut. Now there's only a 3% chance factored in. So it's not inflation and it's not interest rates. So to me, that leaves a couple of things. One is central banks potentially buying gold, and China's central bank for the last 4 months has been buying gold. The U.S. central bank, the Fed, of course, does not buy gold. We're based fully on a fiat currency. Gold would be held by our treasury. So it could be China buying more gold, but it's probably more geopolitical and economic uncertainty. And it's pretty easy to infer that from the trade war that is affecting the market. It would be less likely to be a Ukraine thing because there's been talk among the US and Russia and Ukraine about potentially a ceasefire. Take that for what it's worth. But that didn't get necessarily worse. But what has been getting worse is the tariffs and the trade war thing. So maybe that is a sign of greater worry. Maybe this gold being up quite so much today, nearly 2%, is a sign of greater worry there. So that kind of reinforces some of the market fear that we've seen just from the market coming down itself. However, the VIX didn't really jump up that much today either, sitting at 2466 at the close. So there's a lot of things that are sort of out of whack and sort of jockeying for position here that really just kind of leave room for opportunities. I hope that helps. This is Dan Passarelli. Trade smart.